Thank you very much, Noah, for that report. And that's exactly what we're going to be discussing first on This Week in Perspective. Now, Ken, as much as that, of course, the sentiments of CEO of KBA, Habil Olaka, were shared with regards to it's not just going to jump back to, a quick 20, 23% just like that from the 13, 14 that we've been seeing. How optimistic are you that the bank interest rates are going to remain at a lower level, may not even hit 20 in the coming few months and even a couple of years?
Well, I think he makes a good point when he says that existing clients have already been priced.
Yes.
Even within the cap, the banks found them fit to be lent to. So those should not change. I think the bigger part has been the SMEs that have been deemed risky. Those ones who would have been priced at 20%, might be priced at maybe 18, 19%, which is a good thing because in the previous rate cap regime, they are not eligible for any form of credit. So I think it's a good thing we're allowing the free markets to reign and really encouraging customers to have good business models that are less risky so you enjoy better interest rates. If we can go in that direction, the 7 million businesses that President Kenyatta was talking about will all have access to credit and we'll see the economy reviving, which is what we all want to see.
Now, speaking of course, the 7 million MSMEs that President Kenyatta mentioned, and this was during his official launch of STAWI recently. STAWI has been touted as another one of those ways that access to capital is going to be made easier for MSMEs. And in fact, if we talk about MSMEs, he also said they create 75% of our jobs. I mean, that's a mammoth number. That's such a majority. What do you think about the applicability of STAWI and also the timing of its official launch, given the lifting of the rate cap, the coinciding of both?
I think it's a positive development. If you're going to charge a business 9% per annum, that's a very good rate. Because if you look at the digital mobile lending apps, many of them are charging 6% per month. So if you annualize it, that comes to almost 72%. So if you can actually manage to lend business at 9%, I'm assuming there are no hidden charges, hidden costs. That's sometimes the problem with sometimes these engagements. But I think any entrepreneur will say they would rather take that option any day because it will be much better for their business. So I think it's a good thing using technology to lend. But the question is, the people on the mashinani people who don't have access to sometimes the resources, will they be able to benefit from that? So I think a big part of the success will be the outreach program. Can they reach the farthest farmer in Kisii, in Lamu, in Mombasa? If they can do that, I think you'll see the credit to private sector number finally going up after almost 4 years of going down.
I mean, he even talked about setting up biashara centers, sort of like huduma centers where people can go and be helped with getting their KRA pin, getting their licensing sorted and things like that. Because something else he said, which is very interesting, is that 90% of the startups don't live up to 3 years even, and also that 85% of those 7 million MSMEs are unlicensed. So clearly, it needs to start with a little bit of formalization in the structure, like you've just mentioned, and getting to the people. But during the week also, we talked to former GEM MP Joe Donde about the application of the rate cap over the past 3 years. And he said that it was not applied, it was not implemented the way it should have been, and that there was sabotage from the get-go. Your sentiments on that?
I don't think there was any sabotage. I think simple economics tells you that any time you introduce a cap, not just in the credit market, even in foodstuffs or in produce, anytime you introduce a price ceiling, producers stop producing because for them it's not a profitable venture. So you end up with a shortage. So what happened in the credit markets is there was a shortage because banks said we rather lend to government. So I don't think it was any sabotage to any person. It was just free market economics. So I think the beauty of what happened this week is we restored the free market principles. So even when the central bank gives a signal, that signal transmission to the real economy finally takes place. Now, that was another signal that was not taking place in the economy. So I don't think there was any sabotage on by any particular group. It was just a market failure, which really resulted in what we saw.
Okay, so we've of course discussed the rate cap when it comes to the Finance Bill 2019, but another aspect of that with regards to tax compliance, we saw that, KRA collected about 1.58 trillion 2018-2019. Previous year was 1.43 trillion, and we've seen that they're struggling really to try and accumulate and meet their deadlines and targets. So even as the Finance Bill was assented by the President yesterday, it saw an increase in taxes for income earners from the digital marketplace. In your opinion, just this constant hunt of collection by KRA, is it really something that is maybe stifling businesses, especially now that we look at it even permeating to the online space?
One topic that I've written about on many topics is Kenya lacks a tax policy. And anytime you lack a tax policy, you end up going to the places where it's easiest to collect money, whether it's the banks or telcos. And what that does is it makes investors very jittery because they don't know if next time it will be them.
Yes.
So the first thing that Kenya needs is to have a clear, predictable tax policy so that if somebody wants to do 5-year projections, they know this is a tax that the government will expect from me. That lack of predictability, the fact that today you're in the digital business, you have a digital shop, and you are not programmed that into your projections. Now tomorrow you have to mix, you move from being a profitable business to a loss-making business. So I think the big thinking right now among economists and accountants is, can Kenya for the first time since 1963 come up with a predictable tax policy that says even if it's digital taxation, this is what it's going to be. And it's going to be predictable. What we saw with the excise taxes, one number was quoted during the budget, but when the finance bill was being presented in Parliament, it was a whole different number. This is what creates confusion. And I think this is now would be the next stage for government, really to come up with that document, a policy document.
Absolutely. Well, we're all slaves to one thing, and that is time.